Welcome to Common Sense Investing. My name is Cameron, and today I have the privilege of interviewing the CEO of Gatekeeper Systems, Mr. Doug Dyment. For those new to Gatekeeper Systems, they are a company that provides video security solutions for public transportation. Right now, primarily school bus safety, protecting people in transit, mostly children. However, that's not all. There are other opportunities, other markets such as the bus, the rail that we'll talk about in this interview, first responders, taxis, transports, anything that moves. Gatekeeper has a video security solution for it. As well as thanks to technology and their investments in R&D, it's not just about cameras anymore. They have a host of other services and products, other streams of revenue, including smart city integration, automated lane enforcement, and other offerings, including mobile data collectors, which we'll also talk about in the interview, that should provide recurring revenue in the future. So go take a look at their website, go do your research. This is not financial advice in any way, shape, or form. This is just me talking about Gatekeeper Systems as an average retail investor. Okay, welcome to the channel for an interview with the CEO of Gatekeeper Systems, Mr. Doug Dyment. Thank you, Doug, for being here.
Yeah, good to be with you, Cameron. Good to see you again.
So I'll get this party started, Doug. You just reported on September 10th preliminary fiscal Q4 revenue, which also leads to the end of the year here. Your revenue for Q4 is expected to be $11.5 million. That is 78% higher than last quarter in Q3. That's 57% higher than your last Q4 in 2023. That's 16% higher than your last record revenue, which was earlier this year. That puts you at, 37.6 million expected revenue for the year, which is 35% growth from 2023. My first question, I think most people's question is how? How are you doing this? That's higher than expected growth that I think most of us were talking about, and really looks good. So how's Gatekeeper doing it?
Yeah, Cameron. I mean, it's been a good ride we've been on, and executing, quite frankly, on our plan. The team's really come together collectively to get that done. The platform as a service business model is working quite well. We introduced that a few years ago, as you know, to try to provide more safety systems for certainly the K-12 market in and around those buses. We've successfully done that. We're increasing our revenue per vehicle. We're in the process of uploading more of our MDCs, our mobile data collectors, to the cloud, driving more recurring revenue. The transit market is starting to deliver a little bit more revenue. We're hiring more people in the transit space, certainly on the sales side. So I suppose overall it hasn't been just one thing. It's been a lot of areas are starting to hit, as it relates to product revenue. So that's been, so if you're only reliant on, one specific area, that can be that can be lumpy. But given the fact that we've got a lot of customers in the K-12 side of things, given the fact that we have increase that revenue per vehicle, we're starting to see, average project sizes grow, and certainly, SEPTA has delivered a fair amount of revenue for us last year, across, certainly in the first and second quarters, and but overall, K-12 still is outperforming our transit section at the moment. But having said that, with the new FRA ruling that's coming, with some of our product initiatives that we've got in transit, those sales funnels are growing quite substantially. So it's going to be an interesting ride here in 2025 fiscal. And we're really looking forward to that. We're looking to, we want to see our revenue growing, consistently higher, from where it is in 2024.
So, I mean, that's fantastic, because when we first spoke, everything was SEPTA. Everybody wanted more from SEPTA. Everybody wanted the next SEPTA. So to see you report, 11.5 million in revenue without that major SEPTA contract, I mean, touched on it a bit, but who and where, to be specific for shareholders, who and where is that revenue coming from? Are you starting to get more of that recurring model flowing in from mobile data collectors? How are you getting more per bus? How are we looking at these numbers when we see
Yeah,
11.5
to be a
million?
little bit more specific, the recurring revenue side is still less than 1% of our overall revenue as it relates to, say, 3 and 5 year contracts. Service type revenue, where such as our service contract that we have in some transit agencies, where it's not cloud hosted service, right? It's other type of revenue. I don't really consider that more SaaS revenue. I consider that service type revenue, even though we might have multiple year contracts there. That represents maybe $2-3 million in business for us. So we're still the mobile data collectors. I'm a huge believer that that's going to be a nice part of our future revenue, and we're starting to turn on more and more of those. You're probably going to see in the neighborhood of our mobile data collectors tripling as far as the number that get uploaded to our our hosted site down in Philadelphia. As you know, we launched a new data center in Philadelphia just this year, so we're expecting to turn on more of those mobile data collectors as we move forward. But it's going to take time for that to grow. And really where the growth came from, this year we had over $20 million in sales from our K to 12 side of the business. So student safety is a big issue, right, in North America. And protecting those kids on buses and dealing with all the bullying. Video is just becoming more and more of a main technology to use to solve those problems, no matter what the potential problem is. I think I talked to you a little bit about this pedestrian protector that has built-in AI that we launched, and really unfortunate just before we launched it, where a child was killed going underneath a bus. And I really believe that if we had that technology, that bus driver would have been able to have an alarm send to him prior to that child going underneath the bus, and he never would have left the scene, and that child would still be alive today, in my view, right? So those types of technologies to really create a safer environment in and around the school bus, they're starting to gain more and more momentum. So that's certainly one piece of where the revenue come from. We're starting to get a little bit more traction in the transit side of things. I know all the investors, they want to see another SEPTA, they want to see another big transit agency, a tier one account. Hopefully we're successful in that area, but you have to understand that those larger agencies, they seem to take more and more time to land. And but hopefully we're not too far off from there. But in the meantime, we still continue to drive smaller type of projects, right? That becomes you kind of your meat and potatoes part of your business. And then as far as our future growth, we continue to add the product line to our platform as a service business model, really continue to drive. I'm harping on it, right? But to continue to drive more revenue per bus and per train. So we're expecting to have some contracts here shortly in the train business, and so we see that as a good growth opportunity as well. We're also investing heavily into our R&D, right? We have to stay on top of AI applications and new products and new product development in order to stay ahead of the curve. So we're investing there. The marketing side of things, you're absolutely right. We spent a significant amount of money on trade shows and just making sure that our brand is front and center. I think we did over 50 trade shows this year. So you're going to continue to see us spend more money, in those areas. And operating costs have gone up a little bit, but so is the revenue. And if you look at the strategy, if you remember, Cameron, we came out of Q2 with a significant amount of profit. Some projects landed a little earlier than than we would have projected. Sometimes that happens, sometimes it doesn't. That's totally outside of our control. But our cash went down just because of the sales going up and the receivables going up, and in those 2 quarters. But I could see it turning in the third quarter, so we purposely reinvested in some key areas in that third quarter, and we showed a loss. I knew we were going to show a loss, and I wasn't sure how the capital markets would reflect on that. We got punished, I felt like a little bit, because we showed a loss. But the reality is, at the end of the Q3, I knew we were going to be turning a lot of cash, and we were sitting on what was it, 9.2, 9.3 million in cash, no work, no debt, and 16, 17 million in working capital. So companies like us cannot sit on that cash. We have to reinvest it smartly, which is what we did. And part of that reinvestment, we've seen a little bit of reinvestment show up in revenue in the fourth quarter, but the majority of those investments you're going to see in next year and the year after. So, I feel like we're managing our business well, and the opportunity is out there, but we got to be careful on how much we spend, where we spend, and really try to keep an eye on where we are with that revenue as it relates to how close it is to the beach. So that can be a little bit tricky, but I'm still trying to guide investors to more focus on Gatekeeper in a year-to-year basis. If you're interested in this type of a company, then buy it, put it aside, and just let it grow, and don't necessarily get too concerned, about compare quarter to quarter, because you might be a little bit disappointed some quarters, and other quarters you're going to be ecstatic. But if you take us on a year-to-year basis, I think we're going to be in a good strong position.
So you don't have to convince me too much, Doug, but I know there are some investors. 2023 was very much the year where everybody has been chasing the small, profitable companies with growing cash. And then you get that cash and you need to do something with it. You need to invest to grow. I know you never gave guidance, but we've talked multiple times about, potentially 35 million for this year. And it looks like you're going to be reporting about 37.6 million. So that's a difference of 25% to 35%. So congratulations. And this might get back to repeating yourself a little bit, but I did want to talk because after Q2, you had spoken about having a strategy meeting with your staff about how to get Gatekeeper to $100 million. And then we did go from Q2 to Q3, and I noticed you spent $300,000 more on R&D than you did last year. You spent $500,000 more on admin than you did last year. And so far, you've spent $1.2 million more on marketing. So, yeah, sure, you took a little net loss there in Q3, but you've now reported 11.5 million revenue in Q4. So is that the plan? Is there other strategies that we should know about that came out of that meeting? Is more aggressive marketing closer to that 35% growth, or what can investors expect here?
Yeah, I'm glad you brought that up, because we did bring a significant amount of our people together on the West Coast here to really get their opinions on where they felt like some of the bottlenecks were, and what we needed to do to really get a little bit more efficient in our operations, and quite frankly, I mean, it was a great few days, and we were really quite productive, and we came away with the way we run our meetings is that we have illustrated collateral, if you will, of every topic that goes on, so everybody has a visual. And it was a lot of great brainstorming, and you don't get an opportunity to really bring the team together like that very often. So especially as the company grows and you get more and more people in different geographic regions. So we identified some key areas that we needed to invest in to really just support our customers, and in a better way when you get this kind of growth going on, and there's more and more customer support that's needed. So we've invested heavily in our customer care team. That's growing. We've got a plan to drive more service revenue with that team. We're certainly looking at growing the sales team as well. We're looking at where we feel like the money is going to be in the different segments, and we're investing in that area. We're always going to be investing in R&D. I mean, once you stop investing in research and development and product development, that's the start to the end of the company, as far as I'm concerned, right? So you got to be able to invest smartly in our product development to make sure we got reliable products going out. We're at a point too, Cameron, where we feel like we're going to be having some train projects here, and there's certainly some requirements on the operational side in order to meet QC and QA and documentation. It's really quite similar to when we were focused more on the military space, when we were dealing with the United States Air Force, Boeing Aerospace, Lockheed Martin. They drive a lot of documentation and whatnot. So that's only going to make the company stronger, and I hope that we can accelerate some of that business into more of a global type approach. As you know, we're really only focused on North America at the moment, but some of the business relationships and partners that we have certainly give us the at least a conduit into some other countries around the world. I'm not saying that's going to happen, quickly, but it's one of the building blocks that we're working on to get to 100 million in revenue.
Do you notice more interest? Are you getting calls from institutional investors? I noticed there's been a few 30,000 share buys on Gatekeeper. Share buys, that seems like that's not necessarily retail.
Yeah, it's so the direct answer to that question is absolutely. I've probably taken more calls from institutions and analysts and family funds, a lot of it coming out of the US, in the last several months than I have in the last several years, right? So as you know, there's a lot of money sitting on the sidelines that really hasn't come back into the microcap space since it left when there was such a market correction a few years ago, right? So Gatekeeper, when we recognized that happening, and our stock kind of held in there, for a while during during that downturn, but eventually it got hammered just like everybody else did. But it was not a reflection in what was going on in the company. So we put our heads down. I do not, as you know, I'm not a fan of diluting the company, especially down at these levels. And we've done a really good job in building the cash position up, no debt, and strong balance sheet. So that type of performance is the best way, in my opinion, to get the attention of any of the institutions, no matter how large the institutions are, right? So that is really what's been driving it. And you can spend companies like us, and I know many of them that don't necessarily have the revenue. They can spend over $1 million a year in programs to try to market the stock, right? We won't use the word promotion, right? But that's really what it turns into. And we've invested in some of those programs in the past, not spent an awful lot, but just test drive them. And I really feel like the best way to get attention is to just flat out perform. And the way you perform without diluting is taking your money, your cash, and reinvest it back into the key areas of the business. And so, because of that type of performance, we're seeing strong interest. And a lot of these institutions, by the way, they're just starting to watch us. They've got big appetites, and my my plan, I don't want to say hope, because hope is not a good that's not a good business plan, right? But we've got a strategy to continue to try to perform, right? And really build, try to message to these larger institutions that Gatekeeper is a great long-term play. And because this whole area of public safety and and student safety and security, it's only been growing over the last 10, 20 years, and it's projected to grow. So even in a, depending on what happens with the economy, right? Even in a bad economy, I've always found, like with my experience in the security industry in general, um, that the investment in security, while it might be reduced a little bit, it still stays pretty strong, and you end up with a CAGR growth of, that still stays pretty healthy. So we're in a good business, and I feel like for the most part it can be looked at as inflation proof, right? So it'll be interesting to see what happens with interest rates. They're starting to come down. But our sales funnels are growing, so it's telling me that there's still lots of challenges in the business, but it's telling me that the things that we're doing to at least set us up for growth is bang on. And you know what? I mean, it's nice to be last year we were, if you look at our overall growth, we went from 7.8 to 13.7 to 20 million. Then we pulled back to around 17, 18 million during COVID. And then we bumped back up the next year to 20 million. And then we were 27.8 million. And then this year, it looks like we're going to be north of 35, maybe north of 37 as well as we news released. But to me, it's still a small company, right? I mean, we got a long way to go, right? So I'm trying to get these investors to look at us, long term, 5 year outlook, and be a much bigger company moving forward. So the investments that we're making in the business today, I believe, are going to pay big dividends for those investors that invest today and hold on to the stock.
Yeah, that's fantastic, Doug. That's all the questions I had for you. So, I mean, last chance, did I miss anything that you would like to talk about?
No, I think the one thing that investors continue to ask me is to talk more about our mobile data collectors, because that's a big part to potential recurring revenue, which is, as you know, if you get those recurring revenue type contracts in place, it can drive a higher multiple in the currency being our stock price. We had a just on the mobile data collector side of things, we this past year was a record as far as the number of mobile data collectors. So we'll probably report on that. As far as maybe the numbers for investors to kind of sink their teeth into in the coming weeks. But as you know, you can't become a data company unless you're out at the edge collecting data, and we're selling a lot more systems. So it's not just that the increase in revenue has gone up in the company, but and of course one of the reasons for that is the size of the deal flow, right? Because of the way our platform as a service business model works. I've said that before, but the number of mobile data collectors, and now that we're getting out to the market, it's starting to accelerate at a real strong rate. That's exciting because as the market turns to wireless, we can start to turn more of those mobile data collectors on. And further to that, we're starting to look at offering more and more features surrounding around the management of the data. So hopefully, in this fiscal, we've got more to report on that, as it relates to how we're actually leveraging AI and how we plan to use that AI to drive more recurring revenue services. So that's part of a future play. I know investors are really quite interested in that. When I was down in New York, talked to quite frankly, I can't remember how many in institutions I talked to. I think it was around 17 or 18 over a 2 day period. And if just one of those institutions starts to come in and start to try to get the position that they're interested in, it can have a substantial impact on our currency as far as volume. Now, who knows how much buying and selling is going to be? That'll probably drive the price, but there's a lot of interest there, and like I say, the questions I'm getting is, hey, how many of those mobile data collectors can we start to turn over into recurring revenue? So we want to be communicating that more to investors just so they have a pretty good idea as to how that part of the business is growing. So you'll start to see me get a little bit more focused on that, in the coming months.
Yeah, that's fantastic, Doug. I've asked about that a couple times, but I've never really pressured you. I know this is something that you don't want to report data unless you have enough data to report.
Yeah, you're probably going to see us triple from where we're at today. You'll probably see us triple here soon enough the number of mobile data collectors that will be delivering recurring revenue. Um, but that's still from my perspective, that's still a small amount, right? There's what is there? There's close to 500,000 yellow school buses out there, right? And there's 25,000 to 50,000 manufactured every year. The number's not growing that much because there's some of the older buses, get shut down or sold to South America or whatever, and so it's such a great business because if you look at how the market evolves, our systems, typically will last anywhere from 7, 8, 9 years, depending on certain conditions. Sometimes school districts are replacing them sooner than that. They're replacing them, like in some cases, if they've got the money, they'll replace them like laptops, maybe every couple of years. But then you've got the life of the bus as well. So you got two things going on there. You got the life of the system, and then you got the life of the bus. So it's a replenishing market in the K to 12 side, and it's the same in the in the rubber tire side on vehicles, right? So in transit, maybe the trains are a little different, right? They last quite a bit longer, but it's a good business to invest in, and I encourage investors that if they want to invest in protecting kids, protecting passengers, seriously consider Gatekeeper, because my view is that we're significantly undervalued here, and it's not necessarily because of the performance of the company. It's certainly just kind of where the economics are, or where the money is. It just hasn't flown into the microcap space yet. But I think once it starts to, you're going to start to see more of these groups look for value plays, right? Like who's actually growing the revenue, who's profitable, who's turning cash, and then on top of that, what type of business is it? So I feel like we check all those boxes, and I think that's why we're getting so much interest from the analysts and the institutions I talk to. And we still haven't done a brokered financing, so we only raised 4.2 million back in 2017, and we haven't really raised anything outside of some options that have that have been exercised. So I'm certainly getting asked about that, and I'm pushing back on it as I always do, and trying to encourage people to get into the stock and get their position and hang on to it and watch us grow.
Well, congratulations, Doug. I mean, the prelim numbers are fantastic. I'm sure we'll talk after Q4 and full year numbers, and look forward to having some more information out of you. So thank you for your time.
Okay, very good, Cameron. Good to be with you again. Bye now.